If there's music playing, I can't hear it.
Huh?
If there's music playing, I can't hear it.
Oh.
But you look funny. It was great. It's playing in your ears, but it wasn't playing on the screen.
Yeah, that's terrible. Oh, that sucks.
I should have just let you keep going. That's what
I should have. I would have started singing it. I had it in my head all day. It was Disco Inferno. I had it playing all day in my head. All right. So sorry about that, folks. See, look, best laid plans for somehow that. Oh, it's probably because I have the headphones on.
That's what I said. You have the headphones on.
All right. Let me try it again. Screwed it up.
Just so I can help you with that.
Yeah. It went away. The heck with it. Can you hear me now at least?
I can hear you.
Yeah, okay, great.
Absolutely.
So there we go. All right, so here we go. Welcome. Started playing. How about that? So we welcome to Is that me?
Oh, it's me.
Oh, then no, turn it off. Oh, God bless. Throwing me off even more now. All right. So welcome to another edition of Think with a Drink. This is the weekly webinar series brought to you by the Ares Foundation for Financial Education. We had high hopes for that opening, but clearly that did not work. This week's episode is affectionately entitled Burn, Baby Burn, Crypto Inferno. That was trying to be the intro there to Disco Inferno, which was the song that I was trying to play in the background. Quick checklist as we get started up here. Just know the event is being recorded. The microphones, just keep them muted. Your cameras can be on or off. It doesn't matter because the only thing that's being recorded is what's being shown on the screen. There is a chat box. So if you do have questions as we go along, drop them into the chat box. My co-pilot, who I'll introduce in a second, will be there to answer those and to make sure that I stay on pace and tell me that the music is not playing. My name is Tom Alessi. I am the president of the Ares Foundation. I have been in financial services for past 23 years now, going on to my 24th year shortly here. I'm an investment advisor. That means I act as a fiduciary whenever giving guidance and advice to any of my clients. I want to bring my vice president, Craig. Why don't you introduce yourself?
Sure. So I'm Craig Richardson. I'm the vice president of the Ares Foundation. I do not have music playing in my head. I have been doing this for over 18 years now, and I'm a financial services rep, and I help families define their financial goals and have a better relationship with their money.
And maybe that'll get it out of my head because now, ever since I recorded it, I've had Disco Inferno sitting in my head the whole time. So, but as I said, Craig will chime in as we go along, and if questions pop into the chat box, he'll bring them up or answer them as he can as we go along. Told you that Think with a Drink was brought to you by the Ares Foundation for Financial Education. You can visit our website. It's www.aresfoundation.org. Ares' mission is trying to help everyone have a better relationship with their money, because whether you realize it or not, you are in a relationship with your money. And just like every other personal relationship that you have, there are behaviors and emotional triggers that can cause you to act irrationally sometimes when dealing with our finances. We're a nonprofit. I'm not going to read all of these disclosures. Just know that Craig and I try to do this as an educational experience. We're trying to give everybody some guidance, some advice on a whole bunch of different topics. We do recommend, however, if you do have questions that are legal, tax, or financial, that you do seek out the help of a professional to try to get those answered. And I sort of sped through those because there are actually disclosures for tonight's one, right? These are the disclosures for real this time, which is we are not advocating for or against cryptocurrency in this particular presentation this evening. I mean, for all Craig and I know, fortune may actually favor the bold, like Matt Damon is supposed to be telling you that would happen. As an investor, in any time you're making an investment, you need to make an informed decision based on your own needs, your own circumstances, your own risk tolerance and time horizon. You know, there are some aspects to all of cryptocurrency that does have Craig and I sort of bouncing back and forth with some of my thoughts and some questions that does have us sort of scratching our heads at time about what some of this stuff is. Let's just say these are some of those stories. What was that? The Naked City, right? There's 1,000 stories. What is that show, right? Is that what that was, the series? There's 1,000 stories in the Naked City. This is one of them type of thing. All right, that was a lot of talking, a lot of setup here. Now brings us to the fun part of the evening. We call this Think with a Drink because we want it to be casual and relaxed, and we can't think of a better way to do that than if we have something cold to sip on, and we ask our audience or tell our audience to imbibe along with us. Tonight, I am going to be drinking, Craig, just because I have been dying to try this. This is Boris. This is as they describe it, it's from Bentwater up in Lynn, Bentwater Brewing. Oh. On a dark and stormy night, they created this monster that is basically they took a milk stout made chocolate and peanut butter. It is a chocolate and peanut butter milk stout. It's called Boris. And see, there's another one. See, if I really was getting the musically inclined here, I would have played Boris the Spider, which is where I assume they got the name for this beer from The Who. But I mean, this thing, I just can imagine how dark and heavy this is going to be. It's got an ABV of 8%.
You got to let me know because I have one in my refrigerator and I don't know if I should try it or not.
What are you drinking tonight? I'm
actually going a little lighter than you with Jack's Abbey. I'm doing a Harponious Union.
Oh, nice, nice. There we go. Skull.
Skull. Well, you're not choking on it, so I guess it's not that bad.
Oh, no, that's good. It's definitely heavy. You can definitely get some of that peanut butter, but I think I said if you take it as almost like a dessert, you're fine. And I didn't want to have too much because I got to try to stay up for the Celtics this evening since they're not going to tip off till like 9:08 tonight.
Well, don't we all? So.
All right, so here's our agenda for this evening's show. Understanding cryptocurrency. We're not going to do a deep dive. We've done a deep dive in the past. Maybe we'll do one in the future if this stuff ever does come back around. But this is going to be just a quick understanding. We're going to talk about the crash, what's currently happened. We're going to tell the sad story of the Luna coin and what's going on with Luna. The aftermath, and then where do we go from here is really the conversation with this. So this is sort of the idea of what tonight's episode. I know originally we had billed it as more of that deeper dive and an exploration of Bitcoin and cryptocurrency and NFTs and stuff. But the crash just made us change that, which is why the whole crypto Inferno thing was going on there, that whole idea. So
just let me know if I'm going to cue the music again. That's all.
Yeah.
Maybe on the exit.
Right, maybe on the exit. All right, so cryptocurrency. So high level with cryptocurrency, and this is the thing that's really hard for people to get sort of their brains wrapped around with it. It's digital currency, and really to understand any of the cryptocurrencies, you have to sort of understand the blockchain first, right? So the blockchain is a decentralized public ledger, or basically a record of all the transactions that occur, right, Craig? So, okay, the idea, and the blockchain stores all of these transactions. So basically every time digital cash is transferred from one person to another, the blockchain is updated with a new block, right? Which then records that transaction, and that technology enables cryptocurrency to make secure transactions.
So the block is just the record of the transactions, and the link is one transaction block to the next.
Correct.
It's called a blockchain.
Right. And that's the idea, is that it's, and so, and that's sort of what's keeping it, basically static, making sure that nothing happens outside, that nothing can be manipulated or changed or done anything, because there's all these different ways for handling it.
So it's kind of like Wall Street before computers.
Sort of a similar type of thing, right? Now it's just done at such a level and in different places. It's not held in all one place. That's the other thing. You don't have it, hooked up to one computer that can get unplugged or, something like that. It's a decentralized public ledger. If you think of it, the way did somebody describe it that I immediately connected to, because I'm a football guy. So it's almost like the Green Bay Packers, almost like a mutual insurance company. Like everybody who's got a piece of the crypto owns the blockchain, basically.
Gotcha.
It's so many, levels of that in terms of going through it. Now, there's thousands of coins out there, and we're going to talk about that in later on when we get into some of the questionable stuff that goes on. But what we want to talk about now really is the crash, right? And what's being called the crypto winter right now, which, let's face it, that's a little bit much.
Well, if I'd known you were going to go there, I would have brought out my Game of Thrones mug.
Hey, could add that, or the big hat with the muffs on it and everything. Yes,
Winter is coming.
Winter is coming. The problem is nobody told you this winter was coming. So this goes through all of the different times that Bitcoin has crashed. And we brought this up before with Bitcoin that, it has crashed and crashed hard, more often than it really should if we were talking about a currency, to where you're seeing declines of 40, 50, 70, 80% in some cases. I mean, that is just a staggering drop for something that we're talking about as currency. If we're talking about it as an asset, a stock or something like that, okay, fine, that can happen. But this is supposed to be currency.
Yeah, but even in most stocks, you don't get that kind of swinging in such a short period of time.
Yeah, if you look at those, you can't see them because you're talking 1 to 2 months, those drops.
Yeah, right.
And
corrections, right.
And in this case, and in fact, the reason the winter is here right now is the high watermark for all cryptocurrency was in November of last year. So November of 2021, the total valuations of cryptocurrency was somewhere around $3 trillion. Right? Today, that's about $1.5 trillion. 50% of the gone. Right? If you had put $100,000 into Bitcoin in October of last year, do you know what it'd be worth today?
10 grand?
Now it's 44,000. It's down about 54% at this point, right? At least as it before I went on air.
That's pretty scary.
Yes, right. That's 54% decline in what, a 6-month time frame?
Right, and people put real money into this. So where did the money go?
That's it. It's just gone.
Well, someone got it.
Well, no, it's the valuation. The valuation to the idea. The coin was trading at 67,000 a coin, now trading at 30,000 a coin.
Right. Well, I'm just saying someone sold off at some point. You bought into a coin just like buying into a stock. Someone got the cash. Right.
Well, that's where the crash comes in and what happened. Right. So that's where some of this comes into it. Like what happened. So what you started to, just like the stock market, you started to see a decline in the stock market. And just like what happens in the stock market happens with cryptocurrency, because there are people who are doing futures plays, i.e., betting on the price valuation to the coin. And what happens in that situation is if you're on the wrong side of any type of future play, whether you're long or short, right? Long just means you think it's going to go up. Short, you mean thinks it's going to fall. Is that you generally have to start paying up for that. You get a margin call on your position. And what happens in that scenario? What do you got to do? You got to sell off to cover the bet. So if my margin call was short and the market's declining, I've got to sell stuff to try to get in there. I've got to sell, liquidate positions. That's what started to happen as we were going into the decline. And then you start to get all of this, wait, I want my money. I want, I got to get out. I got to get out. This thing's collapsing and you get a panic sell off.
Right.
And that's essentially what has happened in cryptocurrency. We're going to talk about Luna in the next slide, which is a completely different situation. But in some cases, this is starting to get, Craig, like we talked about, like some of this, like, wait a minute, what's actually backing all of this stuff?
Yeah, well, that's the problem, right?
What's behind all of it? And that's where the interesting story of Luna, which just happened, right? This just occurred in this crypto winter that just happened, right? So Luna, originally LUNA as a coin, is now called Luna Classic. So it's now LUNC, because we'll talk about they redid Luna and made a Luna 2.0, which is now the new LUNA. But that's a different story. So What happened is Luna was a crypto coin that I believe got upwards somewhere into around $130 a coin or so, was pegged in the Terra ecosystem, Terra being the stable coin. We'll talk about that in a second, right? And what you got was this same margin call, this same run up, this same, wait a minute, what's happening? I've got to deal with this. And the collapse to Luna was because they could not keep up with the demand for the out calls, for the people wanting to take money out. It is now trading, I believe, because the problem is between LUNC and LUNA, it's tough to determine which coin is which at this point.
Yep.
But somewhere in the fractional of cents. So from $130 to fractional cents in a very short period of time.
Wow. Wow. So you're very sad if you had Luna.
Yeah, you pretty much lost all your money. And here's the thing is, it was supposed to be tied to Terra, which was a stable coin. A stable coin is supposed to be pegged to a like the US dollar or gold or something like that. It's supposed to trade in a one-to-one value, much like a money market. Think of it in terms of a money market. A money market, the whole idea with a money market is you put $20,000 in a money market and the money market earns interest. When the interest goes up, you're just getting more shares of the money market. You never have the money market valuation be more than $1 per share. So if my money, 20,000 went up to 21, I now have 21,000 shares of the money market at $1 a share. That's how money markets work. Terra is supposed to do the same thing. And what's happening is if Terra goes up, they're supposed to burn Luna coins, destroy them to make the valuation go, and the other way around. If there's too much Luna, then they're supposed to send off Terra so that they can balance it out.
Keep that 1-to-1 ratio.
Make it stable, basically, you know, in terms of going through that. And what happened is it unpegged. In the money market world, that's known as breaking the buck, right? Not supposed to ever break the buck. You're never supposed to go below the dollar valuation, because when you do, suddenly you put $100,000 into a money market. Now the money market's telling you it's only worth $98,000. But you, what do you want? You want your $100,000.
Right. That's what I put in.
What's that? What is that? It's a Wonderful Life, right? That's that scene where they're trying to get their money out, and he says, "I have $216.26 in the bank, right? I want my $216. Can't you just do it with $30? No, I want $216." Well, that's the same idea. Is that you have this, like, all of a sudden now you have all of these people wanting to take out their $100,000. But they don't have the $100,000 because it unpegged, but they're responsible for $100,000. So now they got to create more Luna to try to offset that. And that's what spiraled it out of control.
Right. And that's where the valuation starts to drop.
It starts to drop. And it goes, and it's one of the things that, see, this is where that whole Craig, like pulling the back, don't look behind the curtain thing, because Terra, the stable coin, wasn't tied to anything. While it was pegged to the dollar 1-to-1, but there was nothing in reserve. There was nothing behind. What was behind it? Bitcoin.
So there's no real cash anyway.
Yeah, there was Bitcoin behind it. They were building up Bitcoin. They were going to we're going to sell off Bitcoin if something ever happens. That they called it the Luna Guard or something, the Luna Guard Foundation or something that was supposed to be there should this ever occur. We're going to have this reserve of more cryptocurrency to sell it off. Well, what happened to Bitcoin? The valuation of Bitcoin started to drop. The minute that started to drop, now I got to go back in and I don't have enough. Where can I go? And so Terra dropped. Terra dropped from the 1-to-1 to, again, I think it's, I think it was somewhere around $1. So from, it was at like $100, it dropped down to $1. I mean, it lost 99% of its value and then 99% of its value again.
Yeah, that's not a good day.
No, that was. And here's the last, not the last word on Luna, but the idea with crypto, and that's why the crypto Inferno thing was actually twofold. It was, hey, we're crashing, but at the same time, when you burn crypto, that's gone. It disappears. That's it disappearing it off the face of the earth. You essentially send it to a black hole that, basically just that's it. It can never be revived. Once you burn your coins, they're gone. This is a conversation of people who have Luna, now LUNC, the classic, of saying, I'm going to burn my coins so that hopefully I can raise the value up again at some point. Now think of the logic of that. If you had $1,000 and you were suddenly going to say, you know what, I'm going to take 700 of it and throw it in the furnace and burn it, just so, because my $1,000 has dropped in value so much that I want the dollars to be worth something in the future. So I'm going to burn, 3/4 of it.
Well, isn't that kind of like, the government buying back debt, trying to get money out of or trying to get money out of the system to decrease inflation?
Right, but they're not burning the dollars.
Well, I mean, they're taking them out of circulation.
They do take them out of circulation. That is correct. So yes,
less
right.
dollars in the market, which makes the dollar, more valuable because there's less of them, as opposed to the opposite when they start printing money, which devalues the dollar.
Right.
What Luna tried to do in the first place, right? Created more coins, which created inflation, which dropped the price, and now they're trying to pull back and do the opposite.
Yeah, but this is you having money and you doing it, not the government. You.
Well, right. This is the whole point, right? Isn't part of Bitcoin the issue of trying to deregulate so the government doesn't have their hand in it?
Well, right.
So now
decentralized.
You're stuck with individuals trying to
do something.
Currency exchange, right?
Yeah. And so what Luna did is they tried to resurrect with a new coin. Now Luna, LUNA, versus the Luna Classic, which is LUNC. This is the new coin. This just dropped. Literally, trading became available today. They airdropped them to people, to holders on either the 30th or the 31st of May. So I believe that, but the initial run up to the coin got to about $19 a coin.
Okay.
Last I saw trading was under, it was like $5.90, $5.94 a coin.
So this is kind of the equivalent of an IPO that went bad.
Correct. And here's the whole thing. The difference is it is not pegged to a stable coin. There's no Terra stable coin anymore. There's nothing.
So it's all perceived value.
It's all perceived value.
Wow.
So, these are some of the things, like we said, we're not advocating for or against, but these are some of the things that make us shake our heads and go, wait a minute, what's that on? And then the other story that I had related this to you earlier, this came out a couple of weeks ago, like 2 weeks ago, in a filing that Coinbase, one of the largest US exchanges that you can buy and sell crypto on, basically in a filing that's hidden way down inside the filing, somebody had to go through and read all of it. It basically says that the assets held on the exchange, the cryptocurrency, doesn't matter what cryptocurrency it is, should Coinbase ever go bankrupt, those assets become part of the liquidation to Coinbase. And if you were holding something, you become an unsecured lender, a creditor to the exchange.
So any debts get paid first, and then whatever's left gets disseminated.
Correct.
Right.
Now, what Coinbase is saying, we're being fair and open here with this on it, is Coinbase is saying, that's just a regulatory thing. We're doing everything we can to protect the individual and go through it. But, if you were holding a serious chunk of change on this exchange, and as their share prices have gone down and we're in this crypto winter, you might want to think about moving it off into some other type of a wallet or someplace else than just leaving it on the exchange, because that would scare me as well.
Well, aren't the wallets an issue too, from what I heard, that you get a certain encryption for the wallet, and if you lose the encryption, you lose the coins?
Gone. That's it. You can never get them back. That's a cold wallet and not a hot wallet, or a hot wallet versus the cold wallet. So there's different types of storage that you can put in.
And wasn't there also a whole scandal with people, hacking and getting the wallet keys and stealing those encryptions?
Yes.
Yeah. Okay.
That's the problem with wallets. That's why you leave them on the exchange. And now you're being told by the exchange, oh, wait, if we go bankrupt, you're going to lose it anyway. So it's a little bit of a back and forth there. You really need to be figuring out. But yes, cold storage is you're taking it off. So that would be like putting the crypto into like a into like a flash drive type of thing. Okay. It's a cold storage just means it's not attached. It's not online in any way, shape, or form. A hot wallet is just one that's online. That's what Craig was talking about, where you're getting a passcode and you have different wallets out there and they're online and accessible at any time. It's what's known as a hot wallet. That's all. And then, go ahead.
I said it's all very confusing.
Oh, yeah. No. I mean, if half of this sounds like gibberish, don't blame yourself, because believe me, trying to delve through this has been an experience that we've been trying to do for some time just to get some sort of an idea in all of this. But then our friends here in the backyard of Boston, Massachusetts decide they want to put it in your 401k plan. So that's Fidelity wanting to put Bitcoin in your 401k. That this one I have a lot of issue with, because as Craig, as you and I have talked about, who's regulating this? Who's overseeing it? Who's making sure that this is even a proper investment strategy for the person who's going to do it? And then who's going to be on the hook when it tanks like it did? I mean, think if you were a 66-year-old and you put 50,000 into Bitcoin, and now you got 28,000 or whatever.
Well, I think the SEC was trying to get their hands around it, but I don't know if they ever did. And that may be why Fidelity, they're trying to get ahead of that curve, because they see the market going that direction. People want it, we're all hot for it. But that, this whole, like you said, winter going on with it, you may see people pull back now. So who knows? And like you said, who's holding the bag? So if a Fidelity advisor says to their client, hey, you should put a fraction of your money into, or all your portfolio into Bitcoin, are they on the hook?
Right. Because they're not regulated under our licenses right now. So they might, wouldn't that be selling away? They'd have to get licensed for it, right? I don't know. That's a whole different
commission on it. So it's all, it's the wild, wild west, right?
Yeah, that's a little bit much. All right. So one of the things that you need to be doing your due diligence on, and the term for this in the crypto world is called a rug pull, right? So a rug pull just means, look, I saw this coin, somebody I know invested in it, and the money, they made some good money. They bought it in at 13 cents. It's now trading for like $1.20, and they think it's going to go to $5. So I'm going to get in now. And true to like any other Ponzi scheme, what happens is the individuals who have set this coin up then shut it down and walk away with any of the money that's inside there. And this has happened a lot. And when I say a lot, I mean a lot over the last decade, that you've probably seen anywhere upwards of 50 or 60 of these particular situations occur, where they're just setting up and saying, here's the latest, greatest coin to come. And then once the money comes in, the door is shut and everything goes away.
Well, the other issue, Tom, is you don't even know where a lot of these cryptocurrencies, exchanges start from, right? So you have no, or may have no recourse at all. I mean, it may be started in, a whole other country, and there's no way to touch the perpetrators of the crime.
Right. So one of the things that you can do to be a little prepared for that is to make sure that it's being traded on a major exchange, Binance, Coinbase, Toro, one of those exchanges, because they've actually done at least a little bit of vetting. They've done, okay, I've done some vetting. You guys don't, you're not fly by night guys. You're not at least going to try to scam off. They'll still get scammed, but at least you've got one level that goes in there. Mm-hmm. As far as reviewing the code or the authenticity of it, that you're going to have to do a little bit due diligence on your own. But that's what Craig is talking about, trying to figure out the developer's identity, the known quantity, who's involved with this project. Have they done other stuff? Have they been any shady experiences in the past with them? These are some of the things that you can do to sort of protect yourself from some of this stuff. And, we're not even talking about NFTs, the non-fungible tokens, that whole thing, because that's a whole nother ball of. We'll probably do that later on in the summer when we can get our brains wrapped around it, because that is open for scam and big time rug pulls. That's where most of the rug pulls are going on now.
Well,
So
my mind goes to is Bernie Madoff. Poor guy. He died before he got a chance to get in on this Ponzi scheme. He didn't have to keep records, didn't have to ship assets from one thing to another and make it all up. You just create a coin and then slip it out from under him. Like you said, do the rug pull.
Yeah. Yeah. And it happens. So that's why you just got to be careful with that. And just, if you're going to get in, make sure it's so at this point, Bitcoin, Ethereum, some of the larger, better known quantities of coins out there, yeah, they're going to be more expensive. You're not going to get in on the Shibu or the Doge or those type of things, but those can have rug pulls. So just be aware of that. All right. So which side do you want on this, right? Is it good, right? So you're seeing a lot of major players. When we say major players, we mean major, like we just talked about, Fidelity, BlackRock, JP Morgan. These companies are going in and partnering up with cryptocurrencies to have them become available. All of that says, look, there's a place for this in the world. They just need some regulation, something to legitimize it, to put it in there. And there are coins like again, Ethereum or Ethereum, I don't know how to say it, but anyway, they have legitimate reserves. They're actually got cash reserves. They actually have transactions to show, how much money they're making and the growth that's occurring inside the coin. So there is actually backing to their coin, along with the other things that they're doing. And those on the good side of the ledger will tell you this is mainly anything bad is coming from the media. And the media is just telling you all the bad stuff and telling you that it's a scam and it's this and it's that. It's all that, what anytime anybody says is white noise to that.
Well, I mean, let's be honest too. I mean, anytime you change a currency or exchange, a way of monetary exchange, there's going to be a lot of bumps in the road when you first start. I mean, you go back 200 years ago, they were exchanging pelts and beads, right? Now they went to paper money and coins because it was easier to carry. But I'm sure at that point, it was a matter of perceived value. Well, what can I do with this paper? It's not a skin. And then you watch more modern, look at what Europe was doing to try to kind of put everybody on the same currency going to the euro. Right. And then Brexit happened and they pulled back to do the pound. So no matter what you do, it's really trying to have easy exchange of money across multiple platforms. And so this is probably just growing pains in that area, and a lot of, like in any area, people trying to take advantage.
Right. And I think it's ripe for that taking advantage. But like you're talking about, yes. I mean, you think about anything. It doesn't even have to be currency. Think about, I'm old, so I can date myself to the whole VHS versus Betamax, right? You have two competing types of things at the time, and one of them wins, right? One of them's going to lose, and you're going to get pros and cons on either side, why one was better versus the other. Right. But ultimately, one technology wins.
Correct. Right. So
now go ahead.
So I think you're going to see this long term. I don't think Bitcoin, the idea of it's going to go away. It's just a matter of how is it finally going to fall? Like you said, is it VHS or beta that we end up with at the end of the day?
Right. And I think that's sort of that tug and pull in terms of what's going on right now. The other side of the coin, the other side of the Bitcoin, how about that one? Right. Is those that look at it and go, this is a scam. There's nothing there. There's digital currency that's not backed by anything. There's nobody really behind it because it's not involving any government or anything like that. There's no regulation. So as Craig said, this is like the wild, wild west in terms of what's going on and who's trading and where it's trading and what country you're trading with, because there's nobody minding the store. There's no oversight. There's no overseer. There's no one entity or person that's actually in charge of this. And that, at some point they could just pull the plug on the whole thing.
Well, the other thing too is it's also an opportunity for people to launder money, to move money that they couldn't do through legitimate sources. So there's a lot of, like you said, unscrupulous things that come along with these opportunities. but that doesn't mean that it's going away. I mean, the virtual world is the virtual world now, and this is going to be a part of it.
Right. And I think with most of that is that basically you've got to understand the risks. Like anybody who goes into this now should go in, with eyes wide open, with doing as much due diligence and trying to understand as much as possible. But from our side of the table, it's literally going in and just thinking, if I lose all of this, I'm not, I understand I can lose all of this. Right? Not this whole like I'm going to try to make 7 times my money. It's more of I can lose all of this money, and okay, it won't affect my lifestyle or my life if I do.
Yeah, I mean, you want to look at this as we call those alternative investments. Investments with high risk.
Speculation.
Right? And so you wouldn't want to put any more money in there than you can afford to lose.
Absolutely, and I think that's the sort of the lesson and the takeaway. Yes, honestly, as Craig said, we don't think it's going to go anywhere. Is this at some point some kind of a buying opportunity in cryptocurrency? Probably, sort of, see what weighs out here and what really comes of this. I mean, if another stable coin depegs, then, all bets may be off and you might be flaming, and then we could really have the, burn, baby, burn going in terms of that. But if it's hey, we sort of fundamentally found the place that soft squishy bottom, if you will, and it's going to sit here for a little while and then run from there and go back up somewhere into, Bitcoin at one point was trading at $67,000 a coin.
And what's it now?
Yeah, it's 30,000 now.
Yeah.
In 2018, it was trading at 19,000.
Yeah, you go back 5 or 6 years ago, it was trading at $6. So some people made a lot of money, right? And
they still made a lot of money. It's the people who got in later, certainly over the pandemic years, that have suffered. Basically,
that's how a pyramid scheme works, though.
Yeah.
I was going to say something else, but now I can't remember what it was. That's okay.
Okay. If you come to it, you just remember it. So, for us, what we try to do and try to help everybody, like you said, the mission with Aries is trying to help you have a better relationship with your money, but it's also trying to understand some of the complexity, these other sort of types of transitions that are out there, and strategies and ways to handle money. That's really what we're all about. And we're trying to help everybody have that clear vision of the road ahead. And one of the ways we do that is we put together what Craig and I love to call the roadmap to financial awesomeness. This is a visual one-page tool that basically says, hey, here's where you are. This is where all your stuff is. Do you know what you've got, basically? And then from there, we can help you build that roadmap to figure out where you want to get to. But before you can start that, you got to know where you're starting from. And this is the tool that does that. If you're interested, we're happy to do that. We offer it to everybody. It's a complimentary thing for anybody who comes to any of our presentations. Craig, if you have the link, you can drop it into the chat box.
If I have it or not. Hang on, give me a second.
That's all right. Take your time. We got all night, right? Tip off not till 9:07.
That's true.
This is Craig in our more formal attire. I watched the entire match last night with Brady and Rogers against Allen and Mahomes on the golf course. So we, wasn't really rooting for TB12, but TB12 did win. So that was a lot of fun. That's us in our TB12 jerseys. Whenever we're out and about, we do have fun with that. And we will at some point, as Craig said, probably switch over to number 10 and get Mac Jones jerseys, but they're custom to us. They don't say Brady on the back.
Well, especially if they're Mac Jones.
Yes.
That'd be really messed up.
So keeping the think with a drink theme going, this is what's on tap or what we have coming up in the next couple of weeks. So next week we're going to do, it's the bull versus bear. And this is more from everybody. And I don't care who you are. Everybody has a slant. You're biased one way or the other, whether you're a growth investor in that bull mindset, or you're conservative and the I'm going, things are going to be turning for the worse in a bear mindset. Everybody has a slant. Mm-hmm. And the one thing you have to understand is not only do you have it, but every person you're hearing stuff from has the same bias. They're biased one way or the other. And so you got to sort of go through that and figure out, hey, if I'm listening to somebody, what's their bias? What are they trying to tell me here? And then should you, if you're a bull investor right now, maybe be thinking about the bear mindset. If you're bear, maybe be switching and thinking about being bull. So we'll talk about those things in that. 616, because it's graduation time, budgeting for life after graduation, trying to help all of those graduates, whether it be high school or college, doesn't matter, put together and understand budgeting for life after graduation. And then on the 23rd, because usually all schools are out by that time, the summer spend. How do you enjoy the sunshine and still find ways to save and enjoy yourself during the summer?
Fun.
Greg, any questions in the chat box for us?
I have no questions in the chat box at this time.
Well, that's because Bitcoin is such a crazy thing. And, we're still trying to get our heads wrapped around it. So God bless with that. But if you ever do have any questions on anything, always know you can reach out to us. You can visit the website. It's www.aresfoundation.org. Or you can send us an email. It's info@aresfoundation.org. And I will say on that note.
Hang on. I got a question came in late to the chat box.
Oh, here we go.
What are your thoughts on the Monero? Monero capital.
All right. So is that another coin? Is that what we're being asked about? Another coin? I don't know it. So I gotta be honest with you. All I would say is I would look it up. If it's traded on a major exchange, see if you can find out who's responsible, who's the person behind the coin. And then, like I said, some of that due diligence on the exchange itself might tell you how the coin has been handled and what it's been handled, because that's one of the things. Monero, it might be Toro as far as the exchange for that one. But those are some of the things that I would do as far as looking into a coin if I was going to invest, just to make sure, because like I said, coins can come and go. And unfortunately, if you invest in it, like Craig said, and that rug gets pulled, your money's gone.
Yep.
Okay.
That's what we got. Yep.
I'm going to say good night. Go Celts, game 1.
Have a good one.